You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-options-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now it's time for a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of volatility? Well, let's all find out together, shall we? It is time for Volatility Views, the premier program for volatility traders. My name, of course, is Mark Longo from theoptionsinsider.com, as well as from the ever-compelling, at least we tend to think so around these parts, and we are completely unbiased, Options Insider Radio Network, coming off the heels of our 16th anniversary. Crazy to say out loud here on the network. Thanks to all of you who've continued to drive up our bandwidth bills to record levels here on the network. We love you all out there. Remember, if you're listening on demand, even though the show's been running for over a decade, there are new people to discover it all the time. So if you like what you hear, do keep rating and reviewing it wherever you get it. The show's pretty much available everywhere under the sun by now. And of course, if you want more content in your lives, and hey, who doesn't, right? Maybe you don't want your broadcast week to end with Volatility Views. You want to keep rolling, get a little bit of options oddities in your life after this show. You want, of course, our great pro Q&As. We've had a bunch of awesome pro Q&As that touch on volatility to various degrees. So if you want to get access to all those, the pro giveaways, the live streams of this, everything else we do on the network, theoptionsinsider.com/pro is the place to go to learn more. Let's see who's joining us on the old program today. First, let's go out to the Southern Volatility Mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark SEBASTIan from OptionPit.com. Mr. Meatball, welcome back to the show. How goes your volatility week, sir?
It's a great day. It's a great week for volatility. Lots to talk about right now.
We actually have some
I'm
this
excited.
week. So, yeah, a good couple of weeks here from a vol perspective. And also joining us this week, holding down the NASDAQ hot seat this week, we have a newcomer to the program and indeed to the network. He is ZHOU, the head of derivative strategy at Cowen. Ling, welcome to the Volatility Views program.
Hey, Mark. Thanks for having me. Excited to be here. Definitely interesting couple of weeks. And like Meatball said, lots to talk about.
A lot to talk about indeed. Before we get there really quickly, because you are a first-timer here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the financial and indeed volatility space, as well as what it is you do day to day over there at Cowen.
Sure. So I started my career in the market making program at Susquehanna International Group. Then I pivoted to a strategy role at Macro Risk Advisors, a small options brokerage. And for the past 5 years, I've been the head of the derivative strategy effort here at Cowen, focused on macro and cross-asset volatility, as well as single stock volatility. Lately, taking a slight venture into some crypto vol, as my colleague Drew Foreman, who's I think been here with you before, has started up the crypto institutional effort at Cowen.
We won't hold your Susquehanna affiliation against you at all here on the program. Instead,
No.
we'll just keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and indeed still is from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into the start of the show here, it's kind of a pick your poison, what kind of day you want to have. If you want to be hanging out in, let's say, Uncle Mike territory, green, optimistic, happy, maybe you want to focus on the Dow today. If you want to be a little bit more dire, a little bit more dark, a little bit more in the red, maybe you want to head to NASDAQ territory. S&P is kind of playing the Goldilocks role today. It's kind of floating in the middle of those two. So we got very much a mixed market right now. S&P kind of hanging out slightly down on the day right now. Dow up about 1/3%. NASDAQ closing in almost a full percent, about 0.85% to the dark side. They have tried to take the S&P back down again a couple of times today. It's like we bounced off 40.65. That was the lows like a couple of times today. So they keep trying to suck it down lower. We are, of course, well below that 41.5 level that we were vacillating around for quite some time. Of course, post-Fed, all bets are off. These are indeed wild times out there, listeners. Coming into the start of the show, we had VIX cash not just north of the 20 handle, but north of 21, about a 21.30 when we kicked off the show. It's up about exactly 3 points from where it was this time last week. So a lot of juice coming back in. All of you out there who were saying, oh, maybe VIX calls are dead. I don't need VIX calls anymore. Those don't work anymore. Exhibit A is this week where you got a little bit of upside. It can happen. VIX can go up. It just takes a while sometimes. And then VVIX also looking frothy. Remember when we said it got down to the mid to high 70s? It's like probably not going to hang out there for too long, and that is the case. VVIX at back up to about a 97 right now, so threatening triple digits again. Up 14 points from where we were this time last week. VVIX triple digits, got to sit up and pay notice at those levels. And then, of course, our old friend VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100. No skew there, just at the money, just the facts, ma'am. 2640, up nearly 3 points, 290. Giving up a little bit of that right as we came into the showtime. It was up over 3 points, but of course, some of that vol starting to come off a little bit out there. So a lot to unpack. Another wild week out there in the markets. We had whipsaws. We had Powell yammering on yet again on Tuesday, driving a whole bunch of action, a whole bunch of craziness. Let's start there, Ling. You are our guest. We'll give you pride of place, sir. Obviously, crazy times. Last week, Powell setting the markets on fire. Then this week, keeping the flame going with his comments. What's lighting up your tape and the tape of you folks over there at Cowen this week from a vol perspective?
Yeah, so I think obviously the big theme of the week is VIX going up every day. Well, the whole futures curve shifting up almost in parallel every day. I think across the street, we're seeing a lot of vol buying, specifically put buying. Ton of put buyers going up in the marketplace. And, I think that's a big piece of why you're seeing this upshift in VVIX as well.
And what were your thoughts last week, Ling, as we saw everyone was waiting, obviously, for the Fed, keeping some of their powder dry. Then once the Fed comes out, I don't think you could say overly dovish sentiment, and yet the market really taking the bit in his teeth and rallying, vol kind of coming in. And then, of course, we had that crazy number on Friday, which kind of, I think, threw everybody for a loop. And yet market's still kind of rallying, vol still kind of coming in a little bit. What were your thoughts on all that madness last week?
Well, on the actual, if you read what the presser said, it sounded pretty hawkish, but then Powell came out and spoke for 90 minutes and, didn't really, his words were pretty dovish, right? And that led the market up. And then you had, on top of that, some really strong earnings from Meta, and that move pushed all of its peers up before, Google and, Apple? No, Google and Amazon proceeded to sell off Friday on their own earnings, right? So, earnings season also driving the equity tape higher, and that naturally causing the VIX to come down as you slide up on the skew curve.
Yeah, Meta doing an impressive bait and switch job. Well, pay no attention to what's going on over here. We got $40 billion worth of stock we want to buy back. And everyone said, ooh, that's exciting. So yeah, lots of fun to be had on the earnings front. We'll probably get to more of that a little bit later on in the show. First, let's go back out to the Southern Volatility Mecca. Mr. Meatball, a crazy week out there. Powell not done coming back this week, sending markets into a tizzy yet again. We saw quite a bit of good whipsaw action when he was talking. We sold off a full percent. Rallied back up, back down 0.5%. That was a pretty impressive whipsaw-y day. What was catching your eye this week from a vol perspective, sir?
Yeah, vol has, as Lee was saying, vol's just gone straight up all week. It kind of downticked on February 1st and has been straight up. VIX futures have been incredibly strong. VVIX breaking 100 yesterday. It broke over 100 today briefly. I had not, I look at SPX a lot. But I happen to be looking at SPY, and I hadn't updated my vol since last Friday. And all of my options for March were over $1 through, $1 through my theoreticals. That's how much implied volatility is up. And, we're seeing, on the other end, oil conglomerates are blowing up today. I'm not sure what is driving them, but look at Exxon up 4%. Chevron is up 2.5%. Valero, Conoco, Phillips 66, all BP, all of the conglomerates are having themselves a pretty strong day. That seems to be what's holding up the market. But the NASDAQ, on the other hand, is down about 87. We're seeing softness in just about every tech name out there. Sans, I guess you could say, they're all pretty much just down. So it's a weird day. I don't quite know what is going on with the oil space, but the VIX market is telling me that, I don't know if it's CPI, but people are prepared for something big. I do know that a trader bought a huge amount of S&P futures puts over at the CME expiring next Friday at the 40.5 strike for S&P futures, which is I thought was an interesting trade. 26,000 of them. That is a massive trade for the futures options, and a little bit eyebrow raising, and that definitely spooked people a little bit.
Yeah, they came across our radar on TWIFO yesterday. We were talking about it kind of as it was going up. You're right, 40.5, an interesting strike, a kind of surprising strike.
The rumor is that it's Carl Icahn.
There we go. Here comes the rumor. It's hot and heavy. It's the Sheik. The Sheik is back. You didn't get that rumor? The Sheik is back.
that is the rumor that it was Carl Icahn doing the puts.
It was surprising to see someone buying puts, because usually over there at CME, whenever we're doing that show, it's just thousands upon tens of thousands of 3,400 puts that people are selling day of and trying to pick up literal nickels before the steamroller. So when anyone's buying puts, let alone relevant puts, it kind of comes on our radar. So that one definitely stuck out as people are actually buying puts and they're actually relevant. Kind of interesting out there. Is it Carl Icahn? I'll leave it up to you folks, listeners. Pontificate. Speaking of pontificating, let's go back really quickly to this VVIX. So you're right, it did flirt, it briefly, ever so briefly, kissed a par today. 100.21 was the high earlier today. And you got to go back a ways, listeners, to really get VVIX back up to 100. We kitched it a couple of times in September or October. Before that, very briefly, a couple of days in June. Before that, really, you got to go back to May of last year. As you recall, listeners, VVIX throughout the entirety of the pandemic was well north of 100. We were flirting around 120, 140, all kinds of crazy ranges, but never really below 100. And it finally broke it about May of last year. We kind of made a big deal of it on the show. And again, it has flirted with it a few times since, but pretty much ever since it has been well below the 100 level. So the fact that we are kissing it again, kind of intriguing. Ling, over there, when you're looking at your models, how big of a factor is VVIX? You pay attention to this over there?
Yeah, definitely. It's very important. It's something we've been noting as being very cheap for the past few months. Trading below 80 for a few weeks at a time. Highlighting that, it can make sense to hedge via VIX calls in your book. Now, I think the VVIX levels make a lot of sense mechanically when you look at the beta of how the VIX has been moving relative to the SPX. In 2021, on down days, the VIX moved on about a 3 beta. So if the S&P sold off 1%, the VIX went up about 3 points. Last year, this number dropped to, I think, like 1.2, 1.3. So 1% move down meant the VIX didn't move up as much. And so far to start off this year, it's a small sample set, but we're trading below a 1 beta.
Lee, it was interesting. Last year was the first time where the VIX that I had on record where VIX was actually moving harder when the S&P rallied to drop than it was rallying when the S&P was dropping. So there's a pretty significant pattern change for volatility last year relative to anything we'd ever seen before. This year so far, we just got a little bit of a change in that over the last week or so, but it's been more the same. Do you have any thoughts on why VIX is behaving this way over the last, let's say, 13 months?
Yes, so I think there are 2 main drivers of this. One, last year we saw a huge flattening in the S&P skew complex. And if you think about how the VIX works mechanically, it holds the heaviest weight towards whatever the at-the-money option is right now in the S&P. So if skew is flatter, that means when we sell off 1%, you're now referencing this lower strike put option, but you didn't move as much on a flatter skew curve. So that's going to dampen your VIX move relative to the price change in the S&P. And secondly, last year was the first real year in a long time where we've had macro driving the tape, right? If you look at CPIs, Fed days, and even NFPs, those prints were about 2 to 3 times as volatile in 2022 versus 2021. So when that happens, it's almost like the entire market is reporting earnings, right? Like, for instance, going to next week, like we know CPI is going to happen. Regardless of which way the market moves on CPI or how much it moves, the event vol that's already built in for CPI is going to collapse, right? And that's the cause of a lot of these days last year where we had, SPY sell off 2-3%, NASDAQ sell off 3-4%, and the VIX is unchanged or even slightly down.
A lot of our listeners were lamenting last year. VIX is broken, VIX is muted, call it what you will. You're not a subscriber to those theories?
Well, broken in the sense of not behaving the way that we're traditionally accustomed to, right? I think the big thing that's maybe hard to understand is when the market knows that an event is coming up in the future, they price in all of the event volatility. So ahead of a Fed day, like the VIX is going to be maybe 2 points higher than it would be if that event didn't exist. And once the event passes, that volatility is naturally going to collapse out of the VIX number, regardless of what the market does on the event.
The other big culprit everyone points to over there in terms of VIX maybe performing, even if you don't think it was muted or broken, just differently last year, is this tsunami of 0-day trading over there in SPX. I haven't pulled it up for today. I'm going to wager if I pulled it up for today, the entirety of the top 20 of SPX in terms of most actives would all be 0-day. And if I go out to the top 40, probably 35 to 38 will be all expiring today. So there's been a sea change in the way that product trades. A lot of people are pointing the finger at that, at perhaps having some unintended consequences or ramifications for VIX going forward. What are your thoughts on that there, Ling? The explosion of 0-day and perhaps the ramifications for VIX going forward?
Yeah, I'm not sure that it has a huge effect on the VIX levels, but it's definitely driving some of these crazy intraday moves that we're seeing, right? Like, think about when Powell was speaking earlier this week. Like, what do we have? Like, 3 moves that were all like 60 handles or more in the span of a few hours. You would think that some of the one-day gamma is driving some of those moves.
I don't call them gamma bombs for nothing, Ling. And they're living up to their name. I just ran the numbers while you were talking, Ling, and the top 20, I was right, all 20 are expiring today. And if I expand it to the top 40, we have 1, 2, 3, 4. So 4 of the top 40 only are not expiring today. Everything else is expiring today. The only thing that goes beyond early next week is 9,500 of the June 3,400 puts. Everything else is all pretty much all expiring today in SPX. So again, just a very different beast now from where it even was this time a year ago, listeners. This 0-day phenomenon. People were trading near dated. They were obviously trading weeklies, but we didn't have the full suite of everyday expirations. And once they added those last 2, they really just seemed to have just flicked a switch out there with funds, with retail, with everybody. And now this product is very different as a result. And so I think interesting analysis to be done. I'd love to see some papers going forward on the impact of this 0 DTE and kind of exploring some of the unintended consequences, because they are legion, I'm sure. But let's keep on rolling out here. You were talking earlier, Ling, about the futures curve moving up. We were seeing that again today. Coming into the start of the show, I'm sure if I racked it right now, it might even be a little bit different. But coming into the start of the show, we had the Feb and March futures pretty much moving in lockstep, both of them up almost 1.5 points, about 1.45 points. So moving together pretty much in lockstep. Don't always see that. That is kind of fascinating. And then we go farther out on the curve with most of the rest of the curve looking pretty traditional. We actually peak around September in this year as opposed to the end of the curve. But other than that, no weird spikes in the June or July timeframe like we were seeing earlier. Mostly a flat trajectory, or I should say regular traditional slope up beyond that. But Ling, it has been interesting to watch the vol surface. What was catching your eye out there this week?
Yeah, so I think I'm most intrigued that it wasn't only the front end of the VIX futures curve that caught a bid. Initially, that was my first read, because a lot of the next week and the 2-week out options had been seeing a pretty large implied vol bid, which I think makes sense heading into the CPI print, where options maybe got a little bit too cheap to start the year off, given kind of a large supply of volatility throughout January. But as you guys mentioned, like, even the longer dated stuff is up 2 vols on the week. And I think that really points to just broad volatility buying, across the street this week.
Mr. Meatball, same question for you. Obviously, the vol curve looking a little bit firmer this week. What's catching your eye out there in the VIX futures, sir?
Yeah, well, as Lee said, vol is really spicy. The VIX futures have been, we're up 3 points right now, and VIX futures are up 40 cents. They're coming for volatility protection in Feb. And as Lee stated, March is really bid. The whole curve has shifted higher. We've been flirting with, a little partial backwardation in VIX with, the cash index flirting with going over the Feb future. It hasn't done that yet, but there's definitely a big underlying bid for volatility here.
Let's see if there's a bid for some vol options as well. Let's start out there in VOLQ really quickly. OI looking pretty similar to what it was this time last week. We'll do a quick top 5, then we'll keep on rolling into VIX land. VOLQ number 5, we got the March 24s. Number 4, the March 22s. Looks like a bit of a vertical going up there. Number 3, we got the March 18s. Number 2, the Feb 30s. but the puts. Interesting. And then number one, we've got the Feb 25 puts. So intriguing paper out there for all things VOLQ. Remember I said at the top of the show, listeners, VOLQ hanging out at about a 26.40 when we kicked off the show. Now let's move on out to the mothership, the VIX options. And man, they're putting up some numbers. You know, ever since Powell and the Fed met, we have seen a different volume regime for VIX out there. It has been off to the races as reflected by the ADV. It's up to 639,000 contracts. And now it's up 37,000 again from this time last week. Remember, we were just at like 501 a few weeks ago, listeners. So a lot more paper piling into VIX, and that's evidenced again today. Almost 750,000 contracts. So you're talking almost 750,000 contracts already on the tape for VIX. That's not a normal day, listeners. So that's a lot of paper. Before we get into the action this week, let's break down what the heck is open out there. What is the size? What are, I should say, the size positions out there in VIX right now? And if you're saying to yourself, you know, I think I'm going to find a nice smattering of puts in the top 10, you would be disappointed. There are no puts to be found. 10 calls, 0 puts in our top 10 this week, listeners. Read into that what you will. Number 10 cost you 169,000 contracts to break into the top 10 this week. That's not nothing for VIX. The OI is pretty strong, over 11 million contracts. That's a lot of paper for VIX. Again, reflecting this just surge of paper post-Powell and post-Fed. Number 10, 169,000 of the March 40s. Again, all calls all the time, listeners. Number 9, 176,000 of the June 30s. Number 8, $1.79 of the Feb 70s. Now we're getting back at it, listeners. Number 7, 189,000 of the Feb 80s. Number 6, 194,000 of the March 24 calls. Number 5, 199,000 of the Feb 25s. Number 4, 218,000 of the March 30s. Then we'll go back up again, listeners. Number 3, 220,000 of the March 75s. Number 2, the comparatively reasonable March 26s, 224,000 of those. And the number 1 size position in VIX options right now, and a pretty heavy week, all things considered, 227,000 of the Feb 30s. So we do still see the 75s, the 80s, and the 70s, some of those other strikes out there. But it is nice to see some of these other strikes matriculating up, 25s, 30s, 26s. Dare I say it, the usual starting to make their way back into the top 10 after a year where it was all 75 and above pretty much last year, listeners. So intriguing stuff. We'll get into some of the paper from this week that I want to get everyone's thoughts on what they saw out here from a VIX options perspective. First, today, like we said, nearly 750,000 contracts on the tape. So nothing to sneeze at out there today. The big dog today are the Feb expiring on the 15th, 21 puts, 105,000 of those bad boys going up today, followed by number 2, 67,000 of the March 30s. Number 3, 57,000 of the Feb 19 puts. Number 4, 43,000 of the Feb 23s. And rounding out the top 5 on a fairly active Friday, listeners, 40,000 of the Feb 20 puts. Yesterday, also a pretty busy day, 696,000 contracts on the tape. The big dog yesterday, 61,000 of the March 30s, followed by 40,000 for number 2 of the March 25s. Number 3, 36,000 of the March 17 puts. Number 4, 26,000 of the Feb 20 puts. And rounding out the top 5 yesterday, going all the way out to April, 22,000 of the April doubles, the April 55 calls. Interesting. Wednesday, a little bit lighter, 432,000 contracts on the tape. The big dog on Wednesday, 39, almost 40,000 of the Feb 20 calls. Number 2, 22,000 of the Feb 18 puts. Number 3, just a hair shy of 20K of the March 17 puts. Number 4, 19,000 of the Feb 30s. And rounding out the top 5 on a fairly light Wednesday, 18,000 of the March 18 puts. Tuesday, similar paper, a little bit shy of 500,000 contracts, 482,000 to be precise. The big dog on Tuesday, 54,000 of the Feb 18 puts, followed by a distant number 2, only 28,000 of the March 30s. Number 3, 24,000 of the Feb 17 puts. Number 4, 22,000 of the Feb 19 puts. And rounding out the top 5 on a fairly light Tuesday, 19,000 of the Feb 20 calls. Let me go to Monday. We kick it back up into high gear, listeners. Almost a million, not quite there, but pretty close. 951,000 contracts on the tape on Monday. I believe we talked about this on the option block on Monday. There was that June vertical, the June 30-40 vertical, went up about 123,000 times. So nothing to sneeze at there. We asked you back on Monday, do you guys like that one? I forgot they were buying it. I forgot what price, $1.09, 79 cents, something like that, but they were buying that bad boy. You like that one, listeners? The June 30-40. Number 3, we have the Feb 24 call, 69,000 of those. Number 4, 43,000 of the Feb 20 puts. And rounding out the top 5 on a fairly busy Monday, 30,000 of the Feb 17 puts. Ling, when you're not busy looking at the vol futures, do you pay a lot of attention to the VIX options activity? And if so, what, if anything, caught your eye out there this week, sir?
Yeah, we definitely track all the VIX flows. And I actually think we had a little bit of an imbalance this week where we saw a decent amount of VIX call selling. Just looking, I see on the 6th, someone came in, sold 115,000 of the June 30-40 call spreads. Yesterday, we had sellers of the March 22nd 25-30 call spread. We had a seller of the April 55 calls, a seller of the April 80 calls. And maybe this is a function of that bid in the VVIX we're seeing where, the vol's higher and people think they're getting decent economics from selling some of this VIX upside.
Speaking of VIX upside, really quickly, Ling, last year, as I mentioned at the top of the show, was kind of the year of VIX upside. We saw funds piling into not just your 50s, 60s, 70s, but it was far beyond that, 80s, 90s, pars, 115s. It seemed like the year last year where just about every vol fund awakened to the far upside. Some might say the garbage VIX calls out there. I'm curious, what are your thoughts on that last year? Just the massive influx of funds flowing into those, and maybe, as you said, maybe this week starting to get the heck out of Dodge.
It's one of those situations where if you're forced to buy insurance, maybe you're not very happy owning SPY puts when vol is in the 30 handle, right? And that could cause you to reach into some larger or some cheaper tail options in order to make sure that your book is protected from another move like we saw back in March of 2020, especially when, everyone's talking about recession when is the recession coming? And so I think it's just a lot of people making sure that their far downside tail in equities is covered.
Mr. Meatball, we were talking Monday about that size VIX 30-40 vertical. If you have any further thoughts on that, have at it. And then outside of that massive spread on Monday, what else caught your eye out there in a hurricane of VIX paper this week, sir?
Yeah, just like I said, really robust. Vol's been up all week, continues to go up. And the two-way trading in VIX and the volatility index is pretty intense. They've really bid up VIX options, and thus VVIX the way it is. And we've got a ton of paper going up today. In February, they're buying the 23s are trading, the 24s, the 30s are trading. There's a nickel buyer of the 30s right now, trying to accumulate. So kind of interesting, just really interesting paper all week. Lots and lots of upside trading both ways. So just pretty. It's been a fun week for vol trading.
Did you piggyback that June 30-40? As I recall, you kind of liked it on Monday.
It's an interesting spread. I did not piggyback that though.
No joy for you over there on the 30-40. You like that one, listeners? Are you into a little bit longer term vol upside play here? Let's go out to, speaking of upside or maybe lack thereof out there right now. Interesting stuff here. We've got SVIX, of course, our inverse friend. Obviously coming down a wee bit since hitting some highs over the last couple of weeks in the 18 handle. Now back to about a 16.5. That puts it down almost a full point, about 0.9 of a point. SVIX finally starting to do a little bit of paper out there today. You got about 1,000 contracts on the tape today, even though that ADV keeps moving in the wrong direction. It's down to about 775. So for whatever reason, SVIX can't catch fire. Today looks like the March 20 puts have gone up 420 times, followed by the March 10 calls going up 157 times. I said we're hanging out at about a 16.5. So those are both in the money strikes, which is kind of interesting. In terms of top positions out there right now in SVIX, the big dog are the March 25s, 1,014 of those. followed by number 2, March 15, 600. Number 3, we got the March 10s. Again, strange strikes, March 10s here. 600 of those as well. Ling, I'm curious, when these products launched last year, when SVIX returned, obviously the updated incarnation of XIV, a lot of people did a lot of hand-wringing. They weren't too excited to see an inverse vol product come back. They thought maybe the last time we did this, a lot of people got caught up in a product they didn't understand and they paid the price for it. I'm curious for you, where do you fall on the whole inverse vol spectrum? Are you a fan? Are you not a fan? And what do you think of SVIX here?
I think that any product that provides interesting exposure, or an exposure that you can't get somewhere else is useful. Obviously, it's difficult when you have a product that's this complex, that's maybe difficult for a retail investor to understand, where they might get caught offsides on it. But I do think if people are taking the time to figure out exactly how each of these products work, they can be put to good use in mitigating risks within the portfolio.
Let's go out to its sibling product, UVIX. And UVIX reverse splitting yet again this week, listeners, or at least the market attempting to reverse split it back up to where it was post-reverse split, right around a 22 handle. That's where it was when we kicked off the show. It has given up some of that now. It's at about a 21.20 right now. So still up almost 2 points, about 1.7 points, and back up to around where it was, where it reverse split. So we'll see how long it hangs out up here. Today, looking pretty impressive from a numbers perspective. We always say the end of the week usually tends to drive some paper for these products. So maybe when we're recording vol views, we're getting a little bit of a skewed frame of reference. 4,400 contracts on the tape today. That's nothing to sneeze at. Of course, you look at the ADV, it's moving in the wrong direction as well. It's down another 200 to 3,200. So overall, UVIX obviously still not putting up more paper post-reverse split. Let's look at really quickly what's going up out there today. We have a lot of paper, but it's all small lots. 200 of the Feb 21s expiring today. So we are still north of 21. So good luck to that person. 250 of the Feb 30s expiring next week. That one may be a little bit more challenging. But then again, we'll see. Maybe they're overriding those. In terms of top positions out there right now, we have about 2,500 of the March 25s and then 1,300 of the Feb 13s. For number 2, let's just do a top 3 here because we're coming up against it. 1,100 of the Feb 12 calls as well. Mark, the market generously reverse splitting UVIX back up to where it was when it reverse split. Anything catching your eye out there in good old UVIX this week, sir?
Yeah, I mean, it's flying. It's moving around pretty aggressively, as it should, because it's doing what it's supposed to do. Look at the week's range. It's pretty wide. It was into the 16s. Now it's back at 20, almost 21 and a quarter. This thing could have a pretty dramatic move when on Tuesday post CPI. I've definitely got my ears keeping a close eye on what that index could do, or what that ETF could do over the next week or so. It could be wild.
As we're talking about UVIX, you also got to throw in its other ever-eroding compatriot there, UVXY. Right now at about a 5.5, so that puts it up about 0.4 of a point. This one is still kind of languishing around that 5 handle. I think everyone's still waiting for this one to reverse split as well. Hopefully to a better level than 20, let's say 40, hopefully something along those lines. That would be nice. But again, beggars can't be choosers, I suppose, out there. Looking decent from a volume perspective, UVXY right now, 166,000 contracts on the tape. That's sneaking up on that ADV, which is just a hair under 200K right now. It's actually up about $2,000 from this time last week as well. So UVXY adding paper as UVIX as losing it right now from an ADV perspective. So intriguing out there. I think that's supposed to go the other way, if my math is correct. In terms of top positions out there right now in UVXY, we're looking at 27, almost 28,000 of the Feb 5s. Again, these are all expiring today. Number 2, 23,000 of the Feb 6s. You had a chance earlier this morning for these. I don't think we got quite. Let me pull it up really quick. I don't think we got over a 6 today. No, the high today was 564. So you were close. No cigar there. That's why I say these products can be very heartbreaking. Those are going out today. Hey, you got a few hours left there, but I'm guessing you probably bought those and probably not looking too happy right now. Number 3, we got 21,000 of the Feb 6s, but expiring next week. So they got a little bit more time to work. So intriguing stuff out there. Mr. Ling, are you paying a lot of attention to the ever-eroding vol stable of UVIX and UVXY? And if so, sir, what are your thoughts out there?
So unfortunately, these products aren't as popular as they were before the Volmageddon episode back in 2018. Definitely look at it occasionally, but it's usually trying to explain why the kind of 2x leverage doesn't hold over a long period of time, right? I think a lot of people misunderstand that 2x means you get the 2x return on a specific day, but at the end of the day, they're going to rebalance their futures leverage, and you're not going to get that same exposure over a longer period of time.
The rebalancing is the death of all these products at the end of the day. Let's go on out to VXX. This one has had many deaths, including one last year, very infamously. VXX coming into showtime, 12:30, so catching a bit of a bid out there today. So trying to do what it's supposed to do out there, up about 0.8 of a point. Seeing some decent paper out there, 67,000 contracts on the tape today. That is actually 1,000 more than its ADV, which is hanging out at 66,000 right now. That's also up about 3,000 from this time last week. So the ADV starting to slowly claw its way back. It's still obviously a pale shadow of what it used to be. There was a time there, listeners, VXX was rocking. It could rival VIX options some days in terms of how much paper it was putting up. Obviously these days, a pale shadow of its former self, but we'll see if it can regain its lost luster. I've already said it for me, and I've kind of washed my hands of it. We'll watch it. We'll talk about it here on the show. It's a good indicator for the slope of the term structure out there. But beyond that, putting actual capital behind it, not my favorite product out there. Let's look at the top position, see what's lighting it up out there. About 18,000 of the March 20s are number one, followed by 15,000 of the March 25s. Number three, 13,000 of the March 17s. Let's do a quick top five here. Number four, about 11,000 of the Feb 11 puts. Those are going out today. And number five, 11,000 of the March 15 calls. Mr. Meatball, anything catching your eye out there in the world's favorite broken vol product, VXX?
Yeah, no, I mean, it's rallied and doing what it's supposed to do. I don't really trade it. I do watch it just because it's a good look at what a 30-day future is doing. Up 2% today. Vol there up 5 points. Implied vol on VXX is now 75. That's not low. So the options are pretty juicy.
That is nothing to sneeze at out there. You are correct out there. That's about the 60th percentile out there right now. So yeah, intriguing stuff here for VXX. Mr. Ling, were you like the rest of the world? Did you kind of wash your hands of VXX last year when Barclays had all their brouhaha around this product? Or maybe were you never a fan to begin with, Ling?
VXX is definitely, a useful way to get vol exposure. I think last year, with the whole Barclays no create redeem debacle, the trade became a little bit different, where you were looking to put on the VXX trading at a massive premium to NAV against either VIX futures or one of these other ETFs that hold VIX futures, and try to play for the collapse of that spread, right? Whenever they were able to get their legal issues in line such that they could reoffer the create and redeem baskets. And additionally, right now, I think one interesting trade that we look for in VXX, especially when vol starts to get higher, you can look at owning some 1x2 put spreads. So that trade can get you net flat or net short vol while simultaneously getting you short exposure, or at least short distribution exposure to the VIX or VXX levels coming in lower.
Interesting. 1x2 put spreads in VXX. Don't get a lot of guests coming on with VXX trades. That's always fun.
I like that.
Mixing it up a little bit here this week. Speaking of mixing it up, obviously things are always mixing it up on the earnings front. We are very much in it right now, listeners, in terms of earnings results flying fast and furious this week. Let me just give you a small taste, a small sampling of the names that are popping off this week. On Monday, Tyson Foods, Pinterest, Activision Blizzard, Take-Two Interactive, and Spirit Airlines. Tuesday, we had BP, Hertz, DuPont, and Chipotle. They formerly the stealth Apple, not so stealthy anymore. Wednesday, Uber, CVS, Under Armour, Wendy's, the old Diz, and Robinhood. Thursday, PepsiCo, Duke Energy, a.k.a. the Duck, Hilton Hotels, PayPal, LYFT, and Toyota. And today we had Honda out there. So no shortage of names for you folks to sink your teeth into. We gave you a lot of the earnings move results for names that were popping off yesterday. You can check out those reports. In terms of names that are coming up later on here, well, we had, of course, LYFT. Let's see, LYFT kind of screwing the pooch out there. We had LYFT pricing in. When we ran these numbers, they were at a 1675. They were pricing in 255 out there, listeners. And so in terms of movement, yeah, they're off nearly $6 out there today. So they have dramatically outperformed their straddle, off 36% right now. So yeah, they got it a little bit wrong on that one. That's a little bit of earnings outperformance out there. That's kind of surprising because Uber did all right. I think Uber's done a better job, of diversifying some of their revenues away from just driving people. And so I guess maybe LYFT, not so much. Either way, the market not liking what they're seeing out there from LYFT. We also had PayPal yesterday. They were at 79 3/4 when we ran the numbers. They're pricing in $6.50. They actually moved about $1. They're at 80 3/4 right now. So they dramatically underperformed. That is intriguing. Of course, when it comes to the season itself, listeners, we are hanging out right now at 125%. That means, of course, if everything moved exactly as much as they were pricing in via their straddle, then it would be exactly 100%. So obviously 125%, showing a significant amount of outperformance. We were even higher earlier, about 150%. But as I said on the show, that's not sustainable. That was kind of just the early outliers, some of the names we were seeing. Right now, looking at the season by week 1, 114%. So outperformance there. Week 2, 121%. Week 3, their most robust of them all, 145%. That's why we were starting to get some of those outlier numbers earlier. This week, bringing it back down to earth a little bit, 109%. Still, all 4 weeks in the green. I can't remember the last time we've seen that. So that averages out to 125%. Our longer-term average, going back to actually a little bit before the pandemic, is about a 92%. So that is still dramatic outperformance, however you want to cut it. Are we going to hang out this 125%? Probably not. If I had to guess, I'm going to guess it's probably going to come in some more. Maybe settle out maybe a little bit north of the 100% level. We shall see. But either way, a lot of action, of course. LYFT doing their darndest to try to drive those numbers up out there. And I mentioned yesterday as well, a lot of trades being exited and entered on our earnings trades report this week. We exited straddles in LNC and SEEE and also SSTK, and picked up a couple of, actually closed out some calendars, I should say, in apps and AZN. And then we picked up straddles in LYFT, or calendars in LYFT, I should say. Maybe that one not doing so well right now, as well as who else we got here? BE and OXCM out there. So a lot of names being entered and exited. Of course, we are still tracking about 52 long straddles and 29 long calendars for your trading pleasure out there. Ling, I know you're not talking to us when you're out there talking to all your clients during the week. Obviously, earnings season, a big driver of volatility out there. What's catching your eye on the earnings vol front these days, sir?
Yeah, so like you were saying before, we're getting some pretty big earnings moves this season. Last season, I think, was the largest earnings move season we've seen in the past 2 years. I think the average S&P 500 name moved about 4.8%. In 2021, that number had dropped to, I think one of the seasons was like 2.9%, which was crazy low. And that number has kind of been steadily climbing back over the course of those 2 years. So coming into this earnings season, we're pretty big net vol buyers of earnings vol. And another, I guess, trade or thematic trade I'd like to highlight is trying to capture peer earnings vols. So, for example, Pinterest reported earnings this week, but it historically has been a good mover on Snapchat. It's been a good mover on Meta, and it's been a good mover on Google earnings. So last week, you saw Pinterest rally 9% off of Meta earnings. Then you saw it sell off on Friday 5.5% after Google and Amazon reported. The straddle The pin straddle for last Friday at the beginning of the week was only 6%. So that can often be a pretty incredible vol buying opportunity as well. Some of these lateral earnings moves.
Interesting stuff indeed. As we keep on rolling into our final segment, listeners, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the volatility gods, see what they have on the docket, I should say, for the coming week. And as we come into the end of the show, listeners, market's still pretty much hanging out about where we were at the start of the show. S&P unched to slightly red, a Dow up about 1/3%, and the NASDAQ off about 0.9% or so. So not a heck of a lot of evolution. That means, as we've been talking, we've seen vol come in a little bit. S&P, or I should say VIX, was north of the 21 handle when we kicked off the show, about 2130. It's now about a 2085 or so out there. And VOLQ, when we kicked off the show, is at about 2640. Now it's at about 26 1/4. So fast forward to our vol guesses for this time from last week. I was at a 2715 in VOLQ, so no joy for me. And VIX, I was at a 2065. So I'm looking decent. I'm about 0.2 of a point away, a little bit more. But once again, man, it's perilously close. I was about 0.15 away last week. I'm getting all these half bullseyes in it. If I wait 5 minutes, I'm sure I'll probably be right. And then we have Mr. Meatball. You were at a 2112. So for VIX, not bad for you either. You're about, at least that's ticked up a little bit. So you're about 0.2 of a point away, 0.25. And VOLQ, you were at a 2662. So that's looking a little better, about 0.35 away or so. Scott just did VOLQ, Scott Nations, and he was at a 25, so he's about 1.25 away on his own baby. So at least we beat him on his own baby, Mr. Meatball. So let's look at our listeners really quickly. I think we got some close ones. I'll have my producers go through and see if they find any winner chicken dinners for us here this week from amongst the listener. Looks like the closest I see here is Options God at Frank is at a 21. That's about 0.05 away right now. So actually, Frank, in the live chat, I see you floating in there. Yes. Congratulations to you, Frank. You win a Crystal Ball prize this week. So our producers will reach out to you and let you know what you're looking forward to there. So congratulations to you, Frank, taking it. No joy for Options Queen. She was over a point away this week. So Options Queen falling off in the new year. You got to pick up your game out here. All right, Mr. Ling, I hope they prepped you for what is in store for you now, sir, because it is now the time on the show when the rubber meets the road. We look ahead to the future. I'll allow you to predict whatever you want. You want to do VIX, you want to do VOLQ, you want to do a mix of both. Have at it, sir. But what are you feeling for this time next week, sir?
All right, let's just go with the VIX. And I'm going to be a little aggressive here. We're going to give it a 2475.
Ooh.
Interesting.
I think this VIX, this bid to the VVIX, as well as the bid in the VIX and VIX future structure being, not only in the front month, signifies that the market is prepping for a big event next week. Obviously, I don't know what the result of the CPI print is going to be, but let's call it 50-50. And if it prints hot, I think vol can really explode, especially with all of the gamma that has been placed into the marketplace this week.
All right, Mr. Meatball, I like that. A little bit upside. I don't hate what you're putting down there. Mr. Meatball, I'll let you choose. You want to go second or last?
I'll go second. And Mark, we did just tick 2102.
I did see that. We did just tick north. So where were you? You were 2112?
Yeah.
2103. So, okay, I'll give it to you. Yeah, sure. Why not? You just ticked 0.09 away. So why not? A bullseye for the Meatball. There you go. You don't get many of those. When you get them, you got to enjoy them. There you go. Yeah.
Well, and in palindromic fashion, I'm with Mr. Ling. I don't know that we're going to move. They've already built in a big vol move. I do think vol's going to go higher. I think vol could go high. Vol's going to go higher for the rest of today. Even I'm going to go in palindromic fashion, the perfect palindrome of 2222.
At 21.12, how many times did you swing at that bat before you finally hit it?
A lot. Still going my way. Everything's coming up meatball.
22.22. So the 21.12, it had to finally work out. I'm glad it was this week for you. All right, I'm also feeling a little bit more vol. I was maybe not quite as robust as Lynn. Usually I'm the high guy on the totem pole. I like when someone else is the high guy on the totem pole for the change. I'm going to feel a little bit more as well. I think a 22 handle. That's what I was feeling along the lines as well. I'm going to say 22.67 for VIX. And because we had our buddy Scott on the show last week as well, I'll also go VOLQ because why not? And let's see, VOLQ right now is at about a 26 and a quarter. I'm going to say higher there as well. I'm going to say about 28.55 for VOLQ. All right, so there's your market there, listeners. The correct market, 22.67 for VIX and 28 double for me. For VOLQ, Mr. Meatball at a 22.22 for his weekly palindromic nonsense. And Lynn holding the upside here, playing the Russell Rhodes role at 24.75. All right. That music, listeners, means we come to the end of another excellent journey through the world of volatility. Ling, you were an excellent guest. I hope you had fun in the NASDAQ hot seat this week, sir.
Absolutely. It was a pleasure. Thank you for having me.
And if folks want to check out more of what you and the team over there at Cowen are working on, where should they go? What should they do?
If you have Bloomberg access, feel free to reach out to me directly. And my email is ling.zhou@cowen.com.
There you go. Check them out over there at Cowen. Easy to find, just Cowen, COWEN.com. And Mr. Meatball, if folks want to check out all of your writing and analysis in the world of vol, where should they go? What should they do?
I actually clear Cowen. So when you put out research reports, make sure you're sending those to me. Marketoptionpit.com. Go to Option Pit, and I'm writing stuff on VIX and volatility every day. It's worth the read. Optionpit.com.
All right, listeners, that is going to do it for us here. For all of you on-demand folks, that will conclude your broadcast week. I want to thank all of you for joining us out there, continuing to drive up our bandwidth bills. We love you all. Of course, if you don't want your broadcast week to end, you want more fun content in your lives, like a little bit of options oddities coming up in a little bit, head on over to theoptionsinsider.com/pro. That's the place to go for all you pro folks who are hanging out in there now. Like Frank, congratulations to you, Frank. I love when our listeners win fabulous prizes on the crystal, but not just for us here to play. I want you folks to play as well. Congratulations to you. Hang out in there. We'll be back in a little bit with options oddities. And for all of you folks, back on Monday for the old OB all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we aim to exemplify customer focus, consistent technology, and streamlined solutions. In 2019, NASDAQ proudly launched the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. The VOLQ index uses only at-the-money options, offering the investment world a measure of volatility that directly points to the NASDAQ 100. Since then, CME launched VOLQ Futures, VLQ, and we've launched NASDAQ 100 Volatility Index Options, ticker symbol VOLQ, which are AM-settled index options on the VLOQ index that provide investors with a new way to gauge forward-looking equity market swings. Learn more about these exciting new volatility products at www.nasdaq.com/VLOQ. You can find more on NASDAQ's full suite of index options products at www.nasdaq-100-options-NQX-NDX-VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.